Good afternoon, everyone. Thanks for joining today's webinar on 2020 Sales Tax Changes Mid-Year Update with Avalara. Presenting today, we have Lainey Coleman and we also have Jessica Person. A few things to go over before we get started. If you have any questions, please type those out in the chat window and we will read those aloud at the end and answer them. And also, this is being recorded, so I'll be sending that out to you in a follow-up email within the next day or two. So with that being said, I will hand things over to you, Lainey.
Great, thanks, Allie, and welcome everyone. So I'm Lainey Coleman, and I'm here to talk with you about the mid-year updates and tax changes that you need to be aware of. So just a little bit about myself. You can read this here, but I've been at Avalara for almost 4 years, working as an alliance manager in the great territory of what we consider the Great Lakes. So I'm just so happy to be here, and I really appreciate everyone joining us today. So I want to go ahead and just review what we're going to cover. It's a lot, and I'm going to try to make it as easy to digest as possible. But we're going to talk about the impact of COVID-19 and how states have dealt with it, how organizations, things that you need to think about as an organization. Some of the things that have happened because of COVID-19, there's tax relief efforts. We're going to talk a little bit about economic nexus and what's happened across the 2 years since that has come into play. We're going to talk about some tax policies that states have enforced, looking at goods and services and taxation changes that states have put into place. Talk a little bit about marketplace facilitators, product taxability, and then finally, how do we simplify this using technology? Want to make sure, like Allie said, we're going to have Q&A open at the end, but if you have questions throughout the presentation, please enter those in the chat, and we'll either discuss them along the way or we'll get to them at the end. And then finally, after Q&A, I do want you to stick around. We do have some questions. We have some polling questions we're going to ask you. And then we do have a quick survey that we'd love to get your feedback on the presentation. And if there's any information that we missed, we certainly want to hear from you on that. So let's go ahead and jump in and talk about just the impact and the pandemic and how it's affected states and organizations. So it really has changed a lot. This pandemic has affected everything from supply chains to buying habits to travel. It's affected businesses, putting some businesses completely out of business because consumers weren't out and about consuming. And then when you look at e-commerce and digital goods and services, those trends just went through the roof. Companies had to pivot, companies had to change the way they're doing business, and you're probably shaking your head saying, yep, Lainey, that's exactly what's happened to us. But I think on top of it, there's some good and bad things, so we've covered some of that, but states have also thrown out some tax relief measures so that it's not quite so harsh on organizations with everything that's happening with the pandemic. So we talked about how businesses had to pivot and change with the growth in e-commerce sales. And this is really interesting. A Forbes article talked about the impact. And I mean, when you look at this number, 129% year-over-year growth in both US and Canadian e-commerce orders, that's way back in April. Now those numbers, if we updated those today, I would say that that's a lot higher. I think you would probably agree with me, but that's crazy, huge growth. And so when you look at what did businesses have to do when in-person store visits changed or went away almost altogether for a while? Well, you had to change the way you were doing business, and those online sales is really what you had to pivot to. You also look at businesses like Amazon, maybe even yourself, you had to prioritize sales of those essential items. And I remember hearing, back when all this started, is Amazon wasn't filling their warehouse with anything but essential items. They weren't accepting non-essential items. I think they've pivoted a little bit and they've been starting to change that, but that was a huge impact on their business. And so when you look at all of this, how did your business change and how were you affected by all of this? And I'd be willing to bet, it was either we increased the traffic on the web. We changed and opened, online sales or remote selling, and we changed some of the products that we were selling. Now, the good thing during all of this is states really looked at what was happening and said, hey, we've got to figure out some ways to keep businesses going and support them. And so what are some tax relief efforts we could offer to these companies? So states either waived penalties and interest payments, they extended those filing dates, or they had some temporary exemptions depending on what the products were. So if you look at just these examples, in Alabama and Mississippi, they were like, you know what? We want taxes coming in, so we're not going to have interest payments or penalties. We just want businesses to keep doing business, submit that as much as they can, and we're not gonna have them pay penalties. We want those businesses to stay open. California, Florida, Colorado, they extended those filing and payment due dates. So they offered extra time, which was great. And then in some of the other states, they said, you know what, different types of products, we're gonna go ahead and have a temporary exemption. So they're tax-free and we're not gonna worry about that. We're either gonna instill a tax holiday or for a certain period of time, they were exempt. So that's awesome. I think it's great to see that states were concerned and they wanted the best interest of organizations. And then there's some other tax relief measures. I know there were quite a few distilleries here where I live. I live in Fargo, North Dakota, and there were a lot of people who couldn't get hand sanitizer or cleaning supplies. And so these distilleries said, come here, we're making hand sanitizer. And so states also looked at that and said, okay, if they're making these changes, there's gonna be different taxing and not subject to federal taxes. So it wasn't just the states, but it was federal that jumped on that bandwagon as well. And then the all important PPE, tax exempt for certain products. So that's huge. The great thing here is that we have a tax relief blog. And so you can go out to avalara.com and take a look at those state by state relief measures and see if anything applies to you, even moving forward. Now, at the end of the presentation, we're going to have a poll. And so think about this, so you can answer this at the end, but we're going to ask you how your business has taken advantage of some of these tax relief efforts. So, did you take advantage of deferred payments or extended filing deadlines? Either yes, not yet, but we plan to, or no, we haven't taken advantage of anything of that. So that'll be at the end, and we really encourage you to take that poll. All right, so finally, different considerations for COVID-19 and sales tax. So we all knew that the federal income taxes, that was extended in July. I know I took advantage of that. I thought that was a great thing for our government to do for us. But the one thing to think about too is those sales tax liabilities that your business has, they aren't going away. They might be deferred. There may not be penalties or interest charged, but you're still going to have that liability. So make sure that you're focused on that you're taking care of that, and it isn't that it's going away. It's still there, but it's just deferred. And then remember to check the rules. If you've sold new products or you've moved into new locations, there can be some different implications there. So be very aware of that. I think one of the biggest things that's affected companies is that remote employees. So depending on the state where your employee resides, it can create some triggers that will give you some tax obligations. So take a look at that. Again, we've got some areas on avalara.com that you can take a look at to see if there's something you should be aware of, and either work with your state and local tax expert or with Avalara to review some of those things. I apologize, my slides are moving on their own. I'm not sure what happened there. So now let's talk a little bit about economic nexus. And over the course of the past 2 years, how have things changed? So let's do a quick review on economic nexus, where it came about, how it came about. So South Dakota versus Wayfair was the game changer in sales tax for remote sellers. So back in June, the Supreme Court basically sided and ruled in favor of South Dakota, and basically said if you have remote sellers selling into a state that they have potential liabilities to collect and remit sales tax in that state. Now, physical presence, which is the typical type of nexus creating activity, still is in play. It doesn't take it away, but this changes a lot of things for allowing states to impose those obligations to out-of-state sellers. And so it's based on the level of economic activity in the state. There's a majority of the states have adopted economic nexus rules. And I think the biggest thing is the thresholds vary. And I want to show you just an example of that variance. So here is the United States. And look at all of those different economic thresholds just by examples. So the confusion that lies in economic nexus lies within every state has a choice to do and impose what they wish. And so North Dakota has a law that is different from Connecticut, that's different from the original South Dakota ruling. And then you've got Kansas that basically says, hey, anything remote, you need to collect and remit sales tax. So that's where it really, opens up that risk. And then as things changed, right, with the pandemic, and you're changing the way your business model is, do you fully understand all of those implications? And we're certainly here to help. We do have a tool online. It's a sales tax risk assessment tool, and it can help determine a very, very high level where you might have some risk for economic nexus. And the TM group can send you a link so that you can easily click, take a quick quiz, and see where you're at with that. Now, a poll that we're going to ask you at the end is a question about economic nexus laws. So how has this affected your business? And we're going to ask, has it changed so that you're collecting in 1 to 10 states, 11 to 20, etc. So would love to hear with you on how that's changed your business and where you have begun to collect sales tax in those states. So here's the other thing. I like visual, so you're going to see lots of pictures in my slide deck. But when this ruling came out, as you can see on the left-hand side, June 21st of 2018, there were a few states that jumped on board right away. They were watching what was happening with this ruling. Some of the states, Hawaii in particular, had laws on the books even before South Dakota did. And South Dakota, was the state that was in the case. But these are the first states that jumped on the economic nexus bandwagon. 2 years later, look at how blue the states are. You have all of the states with 2 holdouts out of those 45 states that have had sales tax laws on the books. And the reason Missouri and Florida have holdouts is mainly simply because they just couldn't get the laws passed in time. So let's jump ahead and take a look at these holdout states. So Florida and Missouri, and the reasons why they haven't passed these economic nexus laws yet. The bill is proposed. It's looking at enacting economic nexus. It was ready to be voted on, but it died in March 2020 because of COVID. It's the second law that was filed in Florida, and we anticipate another one actively being looked at. And I would say in 2021, you're going to see something happening with Florida. The issue with Missouri is they're probably one of the most complicated states for sales and use tax. With over 2,200 jurisdictions, they have different specialty rates for food, for utilities, and lots of different things. So the issue with Missouri is the complexity. So I think they need to take a look at those complexities and really figure that out before enforcing, before they'll get the economic nexus laws to pass. So just something to think about, where you're selling into, where you're expanding your business. This is some important information for you to know as well. Now, there's other things that other states have done across the 2 years with Economic Nexus. So Wisconsin specifically is looking to eliminate the transaction threshold. And we've seen this with a lot of states. So some states basically just cut and pasted what South Dakota said with $100,000 in transaction dollars or 200 transactions. So it was an or statement or an and statement depending on the state. Wisconsin is saying, you know what, we're going to be closer to the way North Dakota is, for example. We're going to just have the dollar amount and not have the transaction volume. There's a tax commission that has multiple states on there that's looking at it and saying, you know, maybe we should just tax on retail sales only, or we use the threshold on retail sales only. So that would help with wholesalers not having to register and meet those economic nexus requirements. So that's something interesting. If you're a wholesaler, you're probably going, yeah, right on. I like that idea. So I don't have to worry about that. Texas is making some changes. We've got lots of different groups making recommendations on, do you give businesses a break where it's a 90-day grace period? So if you've hit that threshold, you get a grace period to register, to be able to raise your hand and say, hey, state, I've hit the threshold and I'm doing business in your state and I want to register and pay that sales tax. And then California, with the complexities there, they're clarifying their rules and making things hopefully easier to understand and do business with them as well. But I think the point here is that you're going to see states constantly revising this, taking a look at how do we balance the budget and making those changes. So then the question is, how do I manage the changes? Do I have someone that can stay on top of this so that we're compliant? Now, I talked a little bit about the states offering some recovery to businesses. But what's happening with the state's budgets because of COVID-19? So those relief efforts have kind of hurt the state revenue if you look at it. They've been a little bit more relaxed. And if you've ever seen another presentation that I've done, you've probably seen a slide where I show you what percentage of a state's budget comes from sales and use tax. And typically that's going to be about 47% of their budget that comes from sales tax recovery. But if you look here, according to the Tax Policy Center, that the breakdowns in state government's general revenue, it's kind of shifting a little bit. And especially in 2020, you're not seeing as much immediately coming in from sales tax. And so states are expected to run a huge, huge deficit. I mean, 105 billion with a B. So what are states doing? What are you going to expect to see from a state? Well, I think this is pretty obvious, but I think as a business, you know, an audit. They're gonna increase their sales and use tax audits. They're gonna make sure that they're enforcing those new economic nexus laws. And then looking at how do we tax additional products? What are we seeing more of? And what you're seeing more of is those digital goods and services, because like I said earlier, your organizations are pivoting and changing and making sure you're holding your doors open. And some of that is with new services. So states are looking at wanting a piece of the pie. Another thing you're gonna see is the rate increases, as we all have seen in the past on other things. And then those states who have traditionally not had sales tax laws, you're going to see them changing. We actually have already seen that in Alaska. They have municipalities who are jumping on the bandwagon and have enacted economic nexus laws in a city. I think the other thing you're going to see is those non-compliant vendors. How do we identify where people are not current with their sales tax collection? So they're going to shop online. They're going to do some testing to see, are these people doing things right? And find those targets for audits or non-compliant organizations. And then another thing that I find really interesting is in the future, maybe there's a new requirement of real-time tax remittance. So rather than having to file and having deadlines, there's a way that you could submit sales tax as it comes into you. I think that would eliminate a lot of headaches for a lot of people. It'll be interesting to see how that works and when that's enacted and who jumps on that first. So I found that point very interesting to me. So I think for me, audit considerations, that's one of the biggest things. So states are moving to remote audits. So the question for you is, with those remote audits, how easy is it for you to get the information to those auditors? That's something to think about, and that's part of why we're talking here today. If you're not automated yet, how easily can you get that information to those remote audits? How do you do audits, during shelter in place? The states thankfully have had committed back then when it was shelter in place, we're not going to start anything new. But I think now that things are opening up and things are loosening up, you're going to see more new audits. And like I said, they're going to be remote. And so how do you get that information to the auditors? And I think states are going to be much more willing to negotiate with you on those payment deferrals, or how to close out an audit so that they can generate the payments. So maybe not paying everything up front if they find some issues. Well, let's put you on a plan. Let's get some dollars coming into the state. Okay, so I think negotiation is going to be key with those states if they do find some issues. And so it might be a good time actually to have that audit if you think that you have any issues. So good luck with all of that. Hopefully your audits, if you are in the midst of one, that it's going well, but just know those are some tips from us that we're finding. So I talked a little bit about digital goods and services. And again, I think it's interesting what is being offered, digitally. What are some new things that have popped up in the past 6 months? And most sales tax requirements center around that product that you can hold and the tangible piece of something. There's a few states though that prior to all of this had already been taxing services. So they were futuristic. They understood the importance of that. But as everything shifts and you're getting more digital goods and services, this is going to be very lucrative to the states, and they're going to want to take a look at that. And so when in-person events go online, we're seeing a lot of that in our industry. So how does that work? Those virtual happy hours, wine tastings, and I always laugh about the virtual haircuts. I am not willing to ever do that. But I mean, those of you who are brave enough to figure out how to do that, how is that taxable? And what are the states doing to say, hey, again, want that piece of the pie? So I think the other thing is looking at all of the video conferencing. I mean, think how huge that business has become. So are states taxing on that currently, and how are they changing the way they're approaching that? So whether it's internet access fees or our services that we're all getting used to, you're going to see different taxations being added to that. So kind of look at that down the line and see how that affects how you're doing business. Now, one thing that I haven't talked a whole lot about is sales tax obligations for marketplace sellers. So again, this is becoming huge business, right? So for sellers on Amazon, Etsy, eBay, Walmart, all of these things, there's so many taxing implications for marketplace sellers. How are you compliant? Do you know the reporting laws? Do you know where you have liabilities? I mean, look at how many states have jumped on marketplace facilitator laws. 41 states plus Washington, D.C. all have adopted those laws. So the good thing about that is it does reduce the burden to sellers who only sell on marketplaces, but it does require them to comply with the non-collecting seller use tax reporting. And so if you're familiar with that, great. But if you're not, it's something that you really need to research. And take a look at our state-by-state marketplace facilitator laws on our website, and it can really help open your mind and open your eyes to, what do I have liabilities with there? Now, here's a question for you that's going to be on the poll as well. due to COVID-19, has your business added new sales channels such as marketplaces? So yes, no, or maybe we're planning to in the future kind of thing. So we'd love to hear from you and see how that might be impacting your business as well. All right. So a couple of things to consider as well for some of the marketplace seller updates. A few things that happened early 2020. You can see here the states that enacted new laws. And then again, we see Florida and Missouri popping up again. There are some states that have general sales tax, but no marketplace facilitator laws, in addition to Kansas and Mississippi. And I'm a little surprised that Kansas hasn't jumped on this yet because of their kind of all-inclusive, any with their economic nexus law, any sale is going to fall within that. So I would be willing to guess we're going to see some changes here with some of those states that don't have marketplace facilitator laws yet. But here's why. I mean, COVID-19 interrupted the sessions of their legislations to vote on those. So we'll be seeing things happen now that things are opening up, and people are going to be focused on that and how to get more revenue into the states. And then finally, I mean, these food delivery network companies, they've not had to deal with anything. States are looking at how, again, hey, this is some big business. Look at with all the people who are staying at home but still ordering delivery, how can we get a piece of the pie on that service as well? So you're going to see lots of changes, I think, coming up in the next year on different services here. All right, so product taxability rules. There's a lot that's happening with product taxability, and we're going to talk about just some of the more recent things that you need to be aware of, but just it helps you to really see how states think, right? So in Maryland, the governor did not like this bill that was focused on taxing the retail sale and use of digital codes and digital products. So he vetoed that bill. But that's something, as I talked about before, other states are looking at that. In Nebraska, same thing with digital sales. They were looking to reduce the sales tax rate on those to 4% instead of 5% to those digital products. So, I mean, it's good for consumers, but it's also gonna, I think it'll broaden maybe the products that they're taxing. In Alabama, not gonna tax groceries, which is good. I think in most states, groceries are not taxed, but you know, they were looking at that. So you could potentially see some changes there. Guns, gun safes, you're gonna have lots of different attitudes on should something be exempt or taxed, and different states are certainly going to look at that on how do we do proper taxing for their, whether it's a tax holiday, whether it's exemption, whether it's taxing those products. And then when you look at feminine hygiene products, rather than being targeted and being taxed, there are a lot of states that are saying, hey, these really should be exempt. They are products that people have to have. It's not always a choice. And so they really want to be putting those on the list of exempt products that qualify on those states lists. So I think it's really good that you're seeing states that are really concerned about consumers and not having overtax their consumers there. So there's some good things happening. Now, let's talk about technology and sales tax and what happens from here and into the future. So the first thing I think that businesses aren't always aware enough about is where states are actually saying, hey, how do we help make this easier for companies? So there's a group of 24 states that actually got together years ago and formed the Streamlined Sales Tax Initiative. And, you know, I think this is a fabulous thing. And when you look at so often states and government can put so many regulations on that it can make it, you know, sometimes be more difficult in your business. But these guys really got together and said, how do we make it easier and possibly help the state or the businesses with their expenses. And so they put together a whole listing of, let's have more commonality in our product taxability laws. Let's have commonality in our deadlines. And then finally, they said qualified businesses can be eligible for free sales tax calculations and filing in these states if you use a certified service provider for the software. And so what's awesome is Avalara worked with the SST group, went through all of the testing and all of the requirements, and got the stamp of approval for certified service provider. And so if your business qualifies as a volunteer seller, and you can see the requirements here at those last 3 bullet points, you actually can get, on behalf of the SST states, free sales tax calculating and filing using Avalara's product. The states pay for it, and you get the benefit of it. So it's a beautiful program, and we'd love to be able to talk with you about if you qualify for that. Now, the future of this, we're seeing other states going, hey, you know, that's a really, really good idea, and we're going to create our own program. And so Pennsylvania has its own CSP, Connecticut, Illinois, New Mexico is working on that and saying, how do we establish this? What should it look like? And then Virginia's economic nexus and marketplace facilitator laws look at helping those remote sellers to be compliant. So I think it's great. I think it's one of those things where they're really making the effort. They want that revenue coming in as well. So the easier it is for you to get that to the states, the better it is for the states. So it's a win for everybody. Now, the other thing you're going to see in the future and even current is all of the different things that technology can help a business. So when you have AI, those repetitive tasks and the calculating and risk exposure, the analysis, that can make things so much easier for you by using technology just in your processes. Big data will help tax professionals to see the trends, see the information from a sales tax or a state tax department, and figure out, you know, some of these states that are looking at where are some areas we should tax, where should we increase or decrease rates, that sort of thing. Big data is going to help them do that as well. And hopefully in the end with your business, help you. And then finally, cloud computing for sales tax. This is one of those things where if you can have real-time data, making sure that you are compliant with the state's rules, this is just going to grow now and beyond. So different reasons or benefits for automating your sales tax. You have I talked about the real-time tax calculating. That is the best way to be compliant. Automating things will help reduce costs, will help make things so much more efficient for your folks in the finance team or yourself. And then when you have those accurate results and you're filing on time, your risk and finding the mistakes in an audit dramatically decreases. Your customers are happy because they're getting the right tax charge. They don't have to worry about questioning any of that. And then finally, automating this piece of your business can free up those resources to actually focus on getting your business where you want it to be and growing it in those areas. One thing about sales tax, it's not a revenue generator for you. And so it can actually be a deterrent from getting your business to where you really want it to be. So then how do you do that? With Avalara, we actually have a suite of products, and it really starts with AvaTax, which is our tax calculation engine. And that is the product that links directly into your ERP, your e-commerce, your point of sale system, where that transaction takes place. You see the cloud, it's gonna immediately talk to the cloud as it's calculating those tax rates. We use geolocation so that it's accurate jurisdiction and it's real time, like a split second, and you're gonna get those tax calculations. Now, if you're an organization that works with exempt clients, you can also have one of our products called Cert Capture, and this manages the certificates as AvaTax is doing that tax calculating, it's going to talk over to CertCapture to say, hey, is there anything here, any bit part of this business that shouldn't be taxed? It's going to make sure that AvaTax is doing the right things with exempt customers, and it will either calculate the tax right or it won't, because it'll see that there's a current certificate in there. The other important thing with CertCapture is it will ensure that your customers have a current certificate, that it's completed properly for the state. If anything is improper, or if it's coming upon expiration, it's going to notify your customer that we need a new certificate. Easy email with a link to update all of the information, and you've got what you need to move forward. And then finally, with our returns management, we help make sure that you're filing and remitting those payments on time so that you're not missing any of those important deadlines. So I have been talking a lot to you, and I would love to see if we have any questions, but I want to let you know that we have a ton of information. There's a COVID-19 resource hub. All of these links will be sent out to you, by the way. So we'll get that in your hands. You can see the economic nexus laws by state. We talked a lot about the marketplace facilitator, and you can take a peek at the details of those laws as well. And then looking to learn more about just automating and the products that we have at hand, you can dig a little bit deeper into that online as well. So we'll get those links to you so that you can do a little more research. Or I would highly recommend, if you have some questions and you want to dig in a little bit deeper with the experts at Avalara, we can actually get you hooked up directly with a sales rep to have that discussion, to really dig deep into what are the issues that you're facing at hand today and how can we help you solve those issues. So with that, I'm going to open it up for questions. And again, I encourage you, stay on the line so we can get the poll questions asked to you and the survey at the end. So Jessica or Allie, do we have any questions?
Thank you, Lainey. That was great. And actually, yeah, we do have a few questions, but I just want to mention to everyone in the audience that everyone that attended the webinar today will be receiving a $25 Grubhub gift card. So be sure to keep an eye on your email over the next few days, because we will be sending that out to you.
Awesome.
So on to the questions. we do have a few. So is there a charge for CertCapture?
That's a great question. Yes. With each of our product lines, and I could actually go back to those slides. I never know how to actually go and pick the slide, but so each of these can be, and I'm quoting, purchased alone. So you could strictly just use AvaTax. You can use CertCaptures for certificate management. And yes, it's basically like a subscription. So it's an annual charge that we would charge you. So it's based on number of certificates that you manage. Yep.
Okay, awesome.
Great question.
Thank you. Yeah, that was a great question. Another question we have is, does physical presence still factor in post-Wayfair?
That's an awesome question. I know on one of the slides, it's, I can't remember exactly how it said, but it kind of like it obliterated or some word, I don't remember the word it said, but it gave the impression that physical presence went away. It didn't go away. So what happened is, with the Wayfair thing, it actually just created another type of nexus. And so you still have physical presence, there's economic nexus, plus many other types of nexus that can create that connection between a business and a state that does require you to collect and remit sales tax. So really good question. It may have been a little bit confusing there, but absolutely, physical presence is still probably the #1 type of nexus, but economic nexus is still very, very much a new and important law to follow. So good question there too as well.
All right, awesome. And it looks like we have one more question. What would you recommend if my company exceeds most of the state's economic nexus thresholds, but has not registered anywhere yet? We just registered in our home state. Do we need to worry about historical liability?
Oh, that's a good question. There's a lot there, so I'm going to try. If I miss one of the points, just to make sure I address it. But so you still, if you know that you've hit the thresholds, you want to get registered in those states. The beautiful thing about what's happening right now is I think you're going to have states that are going to be a little bit more willing to negotiate with you. So if there's any back taxes that are owed or anything that you feel, goodness, I think it's been over the past year or what have you that we may have missed this. First of all, I would encourage you to work with your state and local tax expert. You can also work with Avalara's licensing team. But a few things that you would want to do is make sure that you register in those states. While you're registering, is make sure that you consider a voluntary disclosure agreement, that you work with the states to say, hey, I realize now that there may be some thresholds that I hit. I'd like to work with you on, taking a look back. And I'm volunteering that there are some things that we need to look at. And so the states will definitely work with you. And like I said, either Avalara or a state and local tax CPA could help you with that voluntary disclosure agreement. Did I miss any of the other points?
No, I think that covered everything. And it looks like we have one more question.
Okay.
And it's about SST.
Okay.
So with enrolling in SST, does Avalara back you up if you have an audit pop up? That's a good question.
That is a really good question. So if you enroll in SST through us as the certified service provider, I think that's what you mean. Yes. So Avalara does have a guarantee if you're using Avalara as your tax calculation and engine, yes, we do have a guarantee there. And if that's not what you meant, certainly type in more in the chat so I can clarify.
All right, I don't see anything else coming in.
And as we pull up the survey and the Q&A, I think the chat will still be available. Is that right? So if any question pops up, you could ask that as well.
I think the survey will happen once the webinar concludes. So be sure you all stay on the line to complete those survey questions.
So if something happens, and maybe if the survey, gives you a question in mind, jot my information down or send the TM group a question and they'll get that to us and we'll help answer that question. So if something comes up or it sparks a question as you're filling out that survey, we're happy to answer those questions too.
All right, thanks, Lainey and Jessica. Yeah, definitely some good questions there.
Mm-hmm.
And certainly if you guys have any further questions after the webinar ends, be sure to email Lainey or myself and we can get those answered. But thank you so much, Lainey and Jessica, and make sure you guys stick around for the survey. And I hope you guys have a great rest of your week.
Thank you.
Thank you so much.
Thank you.